Hi, I'm MohfizParmar, a first-year PGP student of the Indian Institute of Management, Trichy. As a part of the project work for the subject of Indian economy and policy, I shall be speaking on the topic, the issues in the banking sector in India. Let us first start by looking at the current scenario of the Indian banking sector. At present, there are 18 public sector banks, which would effectively be 12 from the 1st of April 2020. We have 22 private sector banks, 44 foreign banks, 44 regional rural banks, more than 1,000 urban cooperative banks, and more than 90,000 rural cooperative banks. The total number of ATMs in India is expected to increase to more than 4 lakhs by the year 2021. The compound average growth rate of the Indian banking, lending and deposits is more than 10% and 11% respectively. India's retail credit market is the fourth largest amongst the emerging countries. Here we can see the market size and the sector-wise composition of banks in India. From the pie chart, it can be seen that the public sector banks constitute around 13% of the total banks present in India, whereas a large chunk is constituted by the foreign banks. Regional rural banks constitute around 38.13% of the banks in India. If you see the interest income growths, it can be seen that the public sector banks have more or less had the same growth, across years, whereas there has been an increase in the interest income growth of private sector banks. Looking at the total banking sector assets, it can be seen that there has been a growth in the banking sector as a whole. The total banking sector assets were at its peak to $2,358 billion in the year 2018. If you see the current trends in the banking sector, there has been a constant growth rate of around 11.11% in terms of deposits. In terms of credit takeoff, the CAGR increase has been around 5.76%. If we see the government support that the banking sector has, there have been a number of initiatives such as the Pradhan Mantri Jan Dhan Yojana, the Atal Pension Yojana, and the Pradhan Mantri Jeevan Jyoti Bima Yojana, which have further facilitated the inclusivity and ease of banking sector in India. Here are some of the challenges that the Indian banking sector faces as a whole. The first is the availability of loans to MSMEs. Coming to the second challenge, we are here with non-performing assets. It has been calculated the non-performing assets of India have crossed 10 lakh crores, out of which it is surprising to know that more than 70% are from the corporate sectors. One of the main reasons is that the banks are unable to recognize the non-performing assets on time. If we see the private sector, it has defaulted on 6% of the total amount borrowed. The reasons being the inability to repay due to lack of infrastructure, monsoon failures, non-implementation of minimum support prices, and numerous uncontrollable factors which exist in the Indian economy. Coming to the corporate sector, it is due to intentional or unintentional mismanagement of funds. At present, around 12 companies constitute to more than 25% of NPAs of India. The third challenge exists in the form of frauds. It is often interchangeably used with NPAs, however, the two terms are quite different. A fraud is an intentional act by the borrower where there is a scam of funds involved. Some of them are accounting, demand draft, uninsured deposits, bill discounting, fraudulent loans, and check kiting. These are some of the frauds that exist in the Indian banking sector. To list down a few examples, we have two very famous cases of the Punjab National Bank and the Vijay Mallya case. The PNB case being where fake letter of undertakings worth more than 11,000 crores were issued. Coming to Vijay Mallya case, where he was allegedly cheating a consortium of 7 lenders for more than rupees 3,700 crores and defrauding for more than 9,000 crores. The Indian banking sector has been a victim of such frauds every now and then. This has led to the degradation of performance of the banking sector as a whole. Coming to the fourth challenge, is the availability of banking facilities in the rural markets. Around 69% of India's population resides in the rural areas. Many villages do not have adequate branches and ATMs to feed the markets in their areas. The banking sector does not have an infrastructure to reach out to the market at the bottom of the pyramid. Many economists have claimed that there will always be an inadequacy in infrastructure owing to the large population that India has. But there is a need for better supervision and monitoring framework. The current banking sector infrastructure has a way to go if it has to cover all under its reach. Now here are some of the recommendations that can help in overcoming the challenges that the Indian banking sector faces. The capital allocation can be done in better ways as compared to the current scenario. The amount of capital that the government injects in the economy needs to be minimized. This can be done by encouraging the private sector to come to the rescue of public sector banks. This will ultimately help in preserving the fiscal discipline that the governments aim for. The number of public sector banks need to be reduced. It's better to have a few healthier banks in the country rather than an unhealthy many. This is something which is followed, and from April 1st, 2020, there shall be only 12 public sector banks. Tough PCA guidelines for banks for not performing up to the mark will ensure the migration of deposits from such banks to healthier banks. The banks must make full use of the insolvency and board, that is the IBC, to improve performance on a sustained basis. The banks should be able to manage their bad loans by IBC and remain competitive as the bank loan recovery through other routes is not up to the mark. These are the references which were used for making this video. Thank you.